Happy Monday from the Mile High City. Hope you had a great weekend. It is July 25th, 2022, and this is your Monday market update. I'm in Denver this week for a conference, but there's plenty to report from last week, and it is Fed meeting week, so buckle up. Let's talk about last week, then we'll preview if there's anything at all worth discussing this week aside from what's going on with the Fed. So last Monday, stocks did gap up on the open. It was a pretty quiet weekend as far as news is concerned. Bank of America and Goldman Sachs both came out before the open with positive earnings reports. There was plenty to unwind in the reports, but overall, as we discussed last week, there seems to be a feeling that banks have a good handle on the consumer, and they're saying that the consumer is not too negative. Now, again, remember, catch that twist. Like the accent I spoke about last week, not too negative. Doesn't mean they're positive, just means not too negative. Housing news was pretty ugly, but the market hung in there in the afternoon. The bombshell headline came across. At least that's how it was responded to. Apple will slow hiring and spending. Whoa, who would have thought that? Even Apple will slow down. No, really. This is not news. We've been talking about this slowing and moderating of the economy for months. When will this market stop being surprised? That turned the market 180 degrees. The computers, the algos, they looked at the words. As Apple goes, the economy goes. And the economy goes, the market goes. And selling was not furious, but it was enough to move all the averages into the red for the day, all down by less than 1%. Another big day of volatility, though. Dow with a 663-point swing from low to high. S&P down 84% swing, and a NASDAQ 307-point swing. We'll talk about more of that in a bit. But we are seeing a rotation back to from value to growth. I'll explain in a little bit why that is and why it matters. Wrapping up Monday, copper also caught a bid, oil too, and the dollar even came down a bit. We did hear about the dollar playing havoc with earnings, and we'll have to hear more about this. We'll see how that goes. Later in the week, the market is expecting other central bank news, as well as we're going to see if that Nord Stream pipeline gets turned back on in Russia. Or will we see the next leg up in natural gas prices? Tuesday looked like the market looked to take the markets back into the green, at least for the week. Markets opened strong with good news, good earnings news, erasing Monday's decline. Overnight news was not as bad as feared in the Eurozone version of the CPI, in line with expectations. So hopes of peak inflation, peak hawkishness. Also, that Nord Stream pipeline news was good on the day. As of Tuesday, the news was that they'd reopened, but they were going to talk about limiting the output. They had some ugly talk about Germany and cutting them out, but as of Tuesday, it still remained to be seen what really will happen. Also, the Morgan Stanley Supply Chain Index. All right, seriously, where has this index been? I've been watching supply chain with you for as long as we've been talking about it, and this is the first I've heard of this index for it. Well, it was down about 20% in June, improving the supply chain. Well, whatever that index is, market liked that part. That was good news. IBM was down on earnings that the market did not like. Really, what they didn't like was the guidance due to the strong dollar. More so, the algos didn't like that than the people. As Alex Pope wrote, hope springs eternal, and the S&P 500 reclaimed 3,900. LPL Research wrote that the breadth was the best in 3 years, since January 2019. The advancers outnumber decliners 14-1 on the New York Stock Exchange. 98% of all stocks in the S&P 500 was up. That was the most since December of 2018. Don't get so excited yet, but that was seen as very good news. Markets continue to rally on hope. It happens a lot. We just hope that the news comes along to back up that hope. And in other news, we did see a report from Nomura that 41 cities in China are on partial or full lockdown. That was not viewed as positive, but quite frankly, as we know, it was ignored by the bulls. Overall, the Dow was up 2.5%, S&P up 2.8%, and the NASDAQ up 3.1%. Oil was up 1.2%. The 10s, remember that, still inverted. Wednesday was a pretty flat open, and since that is so different these days, the market, quite frankly, didn't know what to do with it. News about the pipeline in Russia was still the same, still wait and see. Inflation data from overseas was mixed. UK CPI and PPI was a bit high, German PPI cooling a bit, Canada too. This was viewed favorably as we're looking for a sign of peak inflation. Later in the day, the markets got some wind under the wings and started to move up as bad news was good news. The IMF reduced German growth estimates again. Goldman Sachs sees a better likelihood of recession, so how is that possibly good news? Well, if the economy slows enough, the Fed can be less aggressive. And as I've told you, I don't think they're going to need to be or be able to be as aggressive as they think they will need to be. Markets did stall out at technical levels and had hits from Google and Ford talking about hiring freezes and layoffs, 8,000 layoffs from Ford. Market held on. The S&P was up about 0.5% on the day. The Dow up slightly. NASDAQ up 1.5%. The strength of the day, of course. I'm not saying that the move is done. Just note that the last time we saw a rally like this, it was March, and it was followed by another 20% downside. So we have to be cautious. Technically, there have been some promising developments, but it is earnings season. Only about 10% is done as of today, as of Tuesday. A long way to go. As I keep telling you, target prices and estimates continue to get slashed. So if we don't get a high percentage of companies beating estimates, we'll have to wonder. As of Wednesday, 70% of them have beaten, and that is down from the 80% last quarter. We'll have to see. Big news after the close from Tesla, and many more companies left to come. We did get Draghi in Italy resigning, and I'm not sure what to think about the fact that on Wednesday, the U.S. State Department issued a red alert for all Americans to leave Russia. Yeah, now. Heat waves across Europe, even enough to melt the runway in London, like they don't have enough travel-related issues already. The market opened Thursday with slight losses, proceeded to drop and test Wednesday's lows. This was following the ECB's raising rates by 50 basis points. There had been talk about that, but officially it was only expected to be 25 basis points. But at 50, it only brought rates back to zero. Anyway, they also announced some additional tools, buying bonds to help the EU. Overall, eco data was net positive. Jobless claims, Philly Fed. Bad news is good. Fed is doing their job, cooling the hot labor market, easing inflation pressures. Tesla did rally on good earnings. Airlines sold off on cautionary comments. Overall, stocks moved lower as news hit about Biden testing positive for COVID. Oh, how far we've come. That news a few months ago would have been huge news. This pretty much shrugged off pretty quickly. Stocks did turn positive into the European close. Bond yields plunged, and S&P hit new highs for the week over lunch. Stocks closed on the highs. S&P up 1%, Dow up 0.5%, and the Nasdaq up 1.5% over 1% for the day. Overall, there was a lot of news. A few important items. Amazon made a big acquisition, the third largest they've done behind Whole Foods and MGM, to get further into the healthcare side. They bought a company called One Medical, a chain of clinics, membership-only clinics, membership for $200 a piece now. Recall that Amazon tried to get into healthcare with Berkshire and JP Morgan a couple of years ago. They gave up on that. Are they going to move ahead alone? And we'll have to see how that goes. AT&T did report, and the market did not like it. Biggest part of that report, people are paying bills late. Yes, they're paying their cell phone bills late. Is that a canary in the coal mine? We'll just have to see. It is a weird one. One other big news item, year over year in June, U.S. gas demand down 8%. That is the demand destruction we've been talking about. The S&P 500 fell nearly 1% on Friday, but did finish the week higher. Dow was also down about 0.5%. NASDAQ almost 2% lower. All three of them up for the week. Dow up 2%, S&P up 2.5%, and the NASDAQ up 3.3%. Social media stocks got clobbered. Snap's earnings led to a 40% drop in that stock, and the ad market came into question. 20% of S&P 500 companies by now have now reported earnings. 70% are beating estimates. American Express came out strong again, saying the consumer's okay. Now remember, what part of the consumer actually carries the American Express card? Yes, they are not the ones that are hurt by higher costs in eggs. So we'll just have to see what that means. Excuse me, the market went into the weekend with a big week ahead. Still lots of questions. Let's take a look at this coming week. There's a lot going on. The biggest two items of the Fed meeting, 75 basis points is expected with the press conference. That may be the setting for fireworks. I don't know. If not, let's wait till Friday, the PCE, the Fed's favorite inflation point. We'll get earnings. I'll save you the time and not list all those that are coming. Just know that they're coming heavy, and they may provide all the necessary fireworks. GDP on Thursday also. In case you want a consensus, you don't get that on Wall Street. We have Ron Barron over here saying that it is there's once in a lifetime buying opportunity, and then the other side, Bank of America, saying that we're headed back to 3,600 of the S&P, one of the lowest on the street. They were at 4,500 until last week. 3,600 will be a 25% drop from January's high. They point out that the average drop in a recession is 31%. There are so many who think that there are many that think this is the wrong call. I happen to think we'll have plenty of volatility, but overall upside from here, maybe to test the June bottom again, but 6 months from now and 1 year from now, I'm feeling optimistic. For now, let's take all this in, work these feelings into our long-term plan, and make sure that the plan will stand the test of time. Be ready for another big week. As I said, I'm in the Mile High City until Wednesday. We'll be back with a new video on Friday. There'll be a lot to talk about next Monday, so stay tuned. Call if you have any questions, or even if you just want to review your allocations to be sure that you're set for the next phase in this market. Have a great week.